Hey, what's up, my friend? Welcome back to this week's market analysis. Right, just a quick one, right? I just cut my hair, so got a few traders asking me, why is my hair always so short? And it's because I cut about every 3 to 4 weeks, right? It's always this hairstyle. I've been having it for the last 10 years, right? I'm someone who is, if it's not broken, right? Why bother fixing it, right? So I like this hair, right? It is short, shaven at the sides, and in sunny Singapore, this keeps my head cool, right, throughout the day. And I love it, right? So for guys out there, if you are thinking, maybe you want to have a change of hairstyle, this is something you can consider, all right? So now back to the markets, right? In today's video, I want to be talking about, how should I put it? Talking about profiting from another trader's losses. Because in trading, right, you're basically dealing in a zero-sum game. For someone to lose, someone has to win. So if you are someone who is, having losses after losses, right, it's time to take a step back and start to think about who is the traders on the opposite side of your trade who is profiting from your losses, right? So think about this, right? For someone to win, someone has to lose. So when you start to think about the opposite party's action, their thought process, it will start to make you a better trader. You start to become more self-aware, and it will eventually lead to better trading decisions. Are you with me? If so, right, then go and watch today's video because I think you'll enjoy it. Okay, so first thing first, right, I just want to say that I've got quite a number of questions from traders asking me, hey Rayner, we really enjoyed your videos, right? Where can we get more of it? How can we stay updated, right? And the easiest way, right, if you're watching right now, is to hit the subscribe button below, right? This way, whenever I publish a new video, you'll be updated immediately, right? So I'll just put a link below for your convenience and just click on it, hit subscribe, and you're good to go. Okay? So now back to this week's market analysis, right? I just want to talk you about profiting from trap traders, right? Traders who are basically trapped in a position. So I just want to walk you through, this particular concept because it is actually very universal. It can be applied across any time frames in any markets. So the first thing first, right? If you want to profit from trap traders who are trapped, right? You first have to understand their mindset. You have to understand where they are coming from and where will they feel the pain if the market goes against them. Are you with me? Right? Let me write this down, right? To profit from trap traders, you need to feel the pain. Feel the pain. I know this sounds pretty sadistic, but it's true, right? You need to feel the pain of these traders. Once you've identified where the pain is coming from, where they are feeling the pain on the chart, then you can actually profit from their misery. I mean, this is trading, right? If this is something that you feel uncomfortable doing, right, then you shouldn't be trading because trading is a zero-sum game. In fact, it's even negative sum if you take into account transaction costs. So yeah, if you want to be a profitable trader in the markets, you have to know where the pain is coming from traders who are actually, losing money. So let me explain to you this concept. So let's say this is it doesn't really matter what market this is. This is, for example, the dollar against the Swedish krona. This is the weekly time frame, and let's say you have this area of support over here. So now there are two groups of traders who are going to look at this chart. Number one is going to short this market. They're going to short the breakdown. All right, they're going to short the breakdown. And number two, there are those traders who are looking to long. And number three, there are traders who are looking to stay out of the market. But let's just keep it simple. These two group of traders. First group looking to short, second group looking to long. So the first group of traders who are looking to short, what will trigger them to short this market? Well, I can walk you through, just a couple of examples. Number one, for example, if price were to trade below this low, they have a sell stop order to get into this market. Or number two, they wait for a close below this area of support, thinking that it's a further confirmation before they go short. So these are, two possible scenarios for traders to go short this market. Okay, so now traders are short this market. The next question is, where are they going to feel the pain? Right? Let me repeat that because this is important, right? For traders who are short right now, where are they going to feel the pain? Think about this. Well, they should feel the pain if price were to trade higher. Am I right? Because if you are short and price trades higher, you are going to feel the pain. Make sense? So in this case, right, they probably start feeling the pain when price has actually closed higher over here, because they are probably in the red already, right? And as price rally higher and higher, the pain get worse and worse, and eventually triggering their stop losses. I believe most of them trade responsibly, right? They have a stop loss in place, so they will feel the pain as their stop loss, whereas price comes closer and closer to their stop loss. So, and this is actually how you can actually profit from their misery, because if you notice, if price does a breakdown, right, like over here, and then the very next candle, the next few candles, the breakdown didn't continue, and in fact it reversed back and even closes back into the range, like this one over this portion over here, then there is this group of traders who are actually feeling the pain, and the way you can profit from it is to trade against their position. So what is the position you should be taking? You should be taking longs, right? Because you are trading against traders who are short. So if you want to go long, then you're basically taking the opposite position of traders who are short this market. So you can go long at the open, stop loss below this low, and yeah, this is basically how you do it. And in terms of targets, for sake of completion, right, these highs and these highs are potential targets that you can look out from. But we're not really talking about the whole complete trading strategy, but it's rather for you to think deeper into how you can actually profit from trap traders. Okay? So now, I want you to understand that, I'm not saying that going short this breakdown is the wrong thing to do, right? Because that is not true, because there are definitely instances where you see price break down and then you just smash lower all the way down lower. And traders who are short basically profit from it. And traders who took the opposite position, who went long instead, chances are being stopped out of their trades. So I'm not saying that, that one approach is better than the other, but all I'm saying is that whenever you want to take an entry in the market, you want to think along the lines of, is there a group of traders who are being trapped? And if they are being trapped, where will they feel the pain? And once you can identify the area on the chart where they'll feel the pain, then that's where you want to take an opposite position to them to profit from their misery, right? I think today's video sounds a little bit sadistic, right? I'm not a sadistic person, but that's basically, how this concept works, right? So let me explain to you, maybe a few potential trading setups for the week that actually, comes with this particular pain concept that we have been talking about. So let's see. How about this, right? The pound yen. So this is the pound yen. This is the daily chart, right? It's in a downtrend, and right now price has traded back. Yes, on Thursday traded above this area of swing high, right? We call it a swing high. So traders who traded the breakout of this swing high are basically long. So where will those traders feel the pain? Well, if you are long, then chances are you need to have a stop loss in place. I'm guessing your stop loss will be below this low and below this low over here. So if you are someone who believes that this trend will continue and you want to profit from traders who are basically trapped right now, right? This is actually a setup that you can take, right? Some traders call it the false breakout. Some call it profiting from trap traders, blah, blah, blah. The concept is essentially the same. It doesn't really matter what name you call it. You can even call it your own, Pokemon kangaroo tail or whatever, right? So that's it, right? So basically, if you want to short this market, right, you're basically profiting from traders who are trapped when they are long. So again, you can go short in anticipation that traders who are long will have their stop loss being triggered over here, and that would fuel further price decline. So this is actually a very common phenomenon. Look at this, right? This is the highs over here, price traded above it, only to trade lower from it. Or here, right, this one over here, price traded lower, and then it started to rally higher, right? Traders who got short at this aspect over here basically got trapped. So as I've mentioned, there is no right or wrong to this approach, right? It's either you're going to trade a breakdown or you're going to fade the breakdown, or vice versa. If you're going to trade a breakout or you're going to fade the breakout, there will be times where the breakout traders would win, and there will be times where the traders who fade against the breakout will win, right? There is no way to tell ahead of time, who is going to be the winner. So all I just want you to do is to understand the different ways traders are entering their trades, and from then on, you can actually establish potential trading setups of your own to trade the markets. So I think that's my point in today's video, right? And at the same time, right, share with you a couple of trading setups for the week. All right, and last but not least, all right, just want to talk about this market, Aussie New Zealand, a potential bottom in place. So we have seen, right, that the Aussie New Zealand, we see that if you zoom out a little, we see that price has been smashing lower over the last few years, right, all the way since 2010. So on a weekly time frame, what's interesting is that this week, okay, we have basically a potential inverse head and shoulders forming. This is the left shoulder, this is the head, and this is the right shoulder. So what happens is, again, this is the area of support. Traders thought it's going to break down, they went short. All right, so if those who are short, where will they feel the pain? Right, if price were to trade higher, right, if you're short, price goes higher, you start feeling the pain. And on Friday, you have this very strong bullish engulfing pattern, right, price closing bullishly higher. So I would say this is a big sign by the market that is looking to set to retest back this highs over here, right, because price clearly at this point in time doesn't want to trade lower. And on Friday, got this big bullish close over here. There's a good chance that the market would trade higher and possibly back retesting this highs over here. And once it's done, right, this is actually a very significant level. It's actually a neckline for this inverse head and shoulders pattern. If it breaks above it, right, then we basically have this completion of this reversal pattern, right? But we're just thinking way too far ahead. But main thing is the concept of thinking of where traders are being trapped and then taking a position that you can actually take advantage of it. And I think there is one more market that is having something similar right now. Okay, how about this? The Aussie Sing, right? It's a little choppy market, but this concept can be applied nonetheless, right? Right, area of resistance, right? And again, price tried to trade higher, couldn't get any higher, and on Friday it smashed lower over here. Traders who are basically long are now feeling the pain, and there's a good chance that it may retest back towards this swing low over here, or maybe even back towards this low over here. Okay, so yep, that's all I have for you in this week's market analysis. I think there's quite a bit for you to think about, to digest, and and this is basically what I'm here for. I'm not here to spoon feed you, to give you specific trading strategies, to copy my own trading style. No. That's not my purpose. My purpose is to share with you the essential trading concept and tools that are available in the markets, and to help you find the ones that you can resonate with, and from then on use them to trade profitably in the markets. That is basically my hopes for you. All right, so with that said, that's all I have for you in today's video. Once again, right, if you've enjoyed it, right, feel free to leave a comment below and I'll get back to you. If there's anything else, all right, you can actually reach me through my website, tradingwithrayner.com, and also hit the subscribe button below if you want to stay updated. With that, good luck and good trading. Talk to you soon.